Hey everyone, stick with us versus herd. If it's your first time here, like the content, hit subscribe. If you want to get notifications from when we post videos, tap the bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If this video has helped you and if you like the video, hit the like button for the YouTube algo. Definitely helps me out pushing this video out to more people. So I definitely appreciate everyone that's watching this and hitting the like button. Now, getting into things, I'm on Robinhood. I'm on my baby account. I just have a little bit of money in here. Currently, you can kind of see I only have $1,700, all of it's deployed. What I'm going to be going through today is how to buy and sell a covered call on Robinhood, and kind of like, why would you want to do this? Why would you want to put a covered call on anything? What is a covered call? So right now I already have one. I will show you how to place the order. I will show you how to sell it. But first off, a covered call, if you don't know what a covered call is if you have 100 shares of a stock, which I do here, as you can see here, I have 100 shares of Kodak, you can sell a call against it. And why would you want to do that? Why would I want to sell a call against my 100 shares? Why wouldn't I just want to have the 100 shares? Or why wouldn't I just buy a call, right? And the situation here with Kodak was pretty simple. We look at Kodak over the last week or so. You know, we had a major dip. It ran from the last week, has come from down from like 24 all the way down to 15, 16 area. And what was happening on Kodak is it was leveling out here at the 14s and 15s. I'm like, hey, maybe I will buy. I'll buy a few shares. If it goes up, great. But how can I, if it just sits here at $15, how can I actually make money? So in order to do this strategy, you have to own 100 shares. For every 100 shares you own, you can sell a call against it. So what I said to myself is like, hey, let's look at see how much options are. How much were options on Kodak? Sorry. How much were options on Kodak? And honestly, like this week, I'm in next week expiration on the one that I'm selling. So look, I was looking at this 18 call here, which you can see here, I already have -1. I mean, implied volatility on this was 246%. Yesterday, these were going for $1.90. Today, they're going for $1.78. So it's been protecting my investment. Implied volatility is so high here, is why I sold the call against it, because I'm looking forward to crush the premium. So if by next week Kodak stays the same price, let's say it's just $15, I'm going to be collecting the money here that I got for the cover call, because as you can see here, Theta is going to give me 14 cents a day, which is $15. I get $15 a day. If Kodak stays the same price, I'm going to be making $15 a day, and I can do that as many times as I want per 100 shares I have. Now, you're kind of saying, hey, what happens if Kodak goes above 18? You're going to owe money, or how's it going to work? Now, Kodak, you can see here how the price action's been working out. Kodak did ramp up quite a bit. What is Kodak up today? Kodak is up today 9%. So I'm making money on the shares. As you can see down here, I'm up 6% today on the shares. But the call that I sold yesterday, I bought this yesterday, as you can see in my order history here. Today's August 6th. Yesterday was August 5th. I got $1.90 credit for it, and I'm up $12. This is only worth $1.78. So if you bought an 18 call, the 18 strike call yesterday for $1.90, today it's only worth $1.78. Sure, it ramped up, but overall I am making some money. So I'm making money on the call, and I'm making money on the shares going up. Even though Kodak has gone up 9% because implied volatility is so high, I'm making money on this call right now. Now it's only $12, but that's 6%. 6% plus the 9% I made today. I mean, that's pretty huge. And that's why you can kind of see how the P&L slowly just kind of trickling up like this, just kind of slow and steady. Kodak is going up a little bit, relatively staying the same, but you can kind of see the premium. That call for next week is not going up. You can see it's not going up. So if the call is not going up, I'm making money. If the way you make money on covered calls or being short a call is you want the premium to go down. So when you get a credit, you want that premium to go down. So now what happens if Kodak goes to $20? What happens if it goes to $40 Kodak? So kind of I did the math, and this is where things, you're obviously not going to collect all the money. You know, you're not gonna make the whole thing. So I bought it at like 15.30. If Kodak goes above $18, that means somebody can exercise that contract, and my shares are going to be sold at $18. So I have a cover call right now. I'm short a call at $18. So I bought it at 15. Let me get you the exact number here. 15. I bought them at 15.35. I'm just going to call it 15 just to round it out here. So I'm going to $15 when that gets called away. So if this goes to $20 and somebody wants to exercise their contract, I'm going to be making $300. I'm going to be making $300 because like from $15 to $18 is $3, and I own 100 shares. So if I own 100 shares, that's $300. Plus, I got a $1.90 credit, which is $190 because you multiply your option by 100. So $1.90 times 100. So I made 100. So I got $190 credit. So when that gets assigned to somebody else, somebody wants to exercise that option that I sold them, they're going to take my 100 shares, but I get to sell them at $18. On top of that, I get to keep the entire credit I received, which was $190. So I'm going to sell my shares from 15 to 18. So I'm going to get 300. So my max profit on this is going to be $490. So the most money I can make on this trade, no matter how high it goes up, is $490. Now, if that call for some reason never gets assigned and no one wants those shares, then we can just let that call expire. If nobody wants it, and we can kind of keep riding up, and we can keep selling calls. Now, if, for instance, another scenario is, what if Kodak just stays at 15 until expiration? Then again, I get to collect the call on this premium. I get to collect the premium on this call. So I get to keep the money, which right now is $190 I got riding on. So if Kodak stays the same price and this just kind of goes to zero, this call goes to zero, never goes to $18 by next week, then I get to keep the $1.90 or $190, and then I can sell another call against it. So that's kind of why you would want to do that. If you don't mind owning the shares, like for me, I didn't see Kodak going below 15. And if it does, we're going to get some money for it because we're going to have that call to kind of earn us money, even it out. And you kind of have to do the math to determine what your break evens are. And really, this strategy, I feel, only works on stocks that you really don't mind holding some shares, and also implied volatility is extremely high, and right now Kodak is an extremely good example because Kodak options. I mean, even if you look at like this week, look at the 18 call. This is 290%. It's going for 43 cents though. But if you go into next week, where my expiration is, I mean, this is going for $1.78. So if it stays about the same price and implied volatility doesn't go down, I'm probably going to be up. It's only going to cost 40 cents next week around this time. So there's a lot of factors when it comes to options. I think cover calls is a good way to kind of slowly make money if you're inexperienced, understanding on how to actually make money on this and seeing it live. So to actually do this, like the thing about Robinhood, whether you're on web or you're using iOS or Android or whatever case is, how to actually pull this off, you actually have to buy the 100 shares first. So let's say you want to go to Kodak. All you have to do, go buy Kodak, type in 100 shares. I'm not going to do the order because I actually don't have any more money left in this account. It's all being deployed right now because, like I said, it's my small account. This is what I use. I use Robinhood for like my play money. It is what it is. But if you look at if you go to buy 100 shares, hit review. You buy 100 shares and they're going to give you 100 shares. Like I said, for this strategy to work, you have to purchase 100 shares at a time. For every call you want to sell short, you have to buy 100 shares. Now, once you own 100 shares, like I already own 100 shares, you can then go into the options. So once you purchase your 100 shares, go to trade options, and then you can kind of look to see what you want to do. Do you want to do something for this week? You want to do something for next week, 2 weeks out, a month out? I mean, you can do whatever you want. Like you can go out to September 25th right now, get the 18 call, click the big premium and just sit on it. You can do that. You can get a bigger premium. If that gets called away, it gets called away. We'll see how it goes. I mean, I was just kind of messing around with Kodak. I wasn't really too serious about it, so that's why I went to next week expiration. So I'm actually just going to go into next week expiration again. And what you want to do is you don't want to buy a call, but you want to sell. You want to sell one short. So that way you receive a credit. If you buy, you receive a debit. If you sell, you receive a credit. So I'm just going to hit sell. You hit sell up here. Make sure it's a call. And then you can add one of these to your order. And you know that you did it right because it's going to tell you, hey, you're going to be short a call. Short call. And then just hit continue and place the order for one. Because you only, unless you have multiple. For every, like I said, for every 100 shares, you can do one of these calls. You can short one call. So if you have 200 shares, you can short 2 calls. think you can do the math here, because as you can see, one contract equals 100 shares each, so I'm selling against it. And to do this does not cost you anything in buying power. Since you already own the shares, it's not going to cost you anything in buying power. So what you want to do now, once you sure you've selected the right thing, you hit sell, call, and then select the one that you want, based on how much premium you want to get, how much time you want to get, and kind of see, what you want to sell it for. I liked $18 when I did mine. So then I'm going to hit review, and then I'm going to actually submit this, and I'm actually going to be short a call, and then it will show up in your account similar to this. Like, it'll show up in your account, your portfolio. You have 100 shares of whatever stock you bought, and then you're short one call. Okay, to get rid of this the proper way. Because like I said, Robinhood, for advanced strategies, they don't let you close this all in one order. Other platforms like Tastyworks, you can close cover calls and stock at the same time, but on Robinhood, they don't let you do that. So what you want to do first, so that way you can minimize, that way you can make sure you have enough buying power. Some people don't have these big of accounts. Some people don't have enough buying power. So what you want to do is you want to buy back the call first. So let's say I wanted like, okay, I made enough money today off this or this week since I've had this position on. I want to get rid of it. What you want to do then, focus on the call. So I'll go is buy the call. Why am I going to buy the call? The reason why is because you're short one call. See your contracts right down here? It says -1. Your goal is when you're trying to close out a short position or any position. So let's say you're a long one call. You want to bring this to 0 so that way you're close out. Right now, I'm -1 call. So to bring it to 0, to bring this to 0 so my account is clear, I want to buy one, right? So I'm going to hit 1. Make sure you're under buy to close. You hit 1. And if I hit review order, I will be buying back that call because I'm short one call. I'm not going to close out, but just kind of showing you how to do it. So if I hit submit here, I'm going to buy this back for $1.75. I sold it for $1.90, going to buy it back for $1.75. So that means I'm going to make $15 on this. I made $15 on this. So I hit submit. So after you submit it and it sells and you're clear, this won't show up in your account anymore, and you'll see it in your main portfolio. You'll only have the 100 shares. I'm not going to sell right now because I don't want to close. You're only going to have the 100 shares. So once you click on once you're ready to get to this part, click on your stock that you want to sell, and make sure you're not buying more. Make sure you hit sell. Sell Kodak, and then type in how many shares you want. Or there's an option also on web and app. You down here, just hit sell all. See where it says right down here, it says 100 shares, sell all. You can also tap this on mobile. There's also an option to tap on mobile. Just hit sell all, and this will sell all of them, right? So I automatically put in my 100 shares, hit sell, bada bing, bada boom, you're good to go. I definitely recommend putting in a limit order versus a market order, because sometimes you don't know what you're going to get filled at a market price. If you have a lot of these, it could cost you quite a bit of money. So that's the basics on how to buy and sell one, how to get rid of the position, how to add the position, and also why you would want to put this position on. I definitely suggest you test this strategy out before you just going in blind buying all this stuff. If you don't know what options are, leave a comment below. Let me know what you think. If you need help, join our Discord. We're here to help. As always, stay safe, stay green. It's us versus herd.